Hi, everyone, and welcome back to a new episode Behind the Wealth. I thought to talk a bit about concessional contributions, non-concessional contributions, and carry forward contributions because we are approaching at the end of the financial year in 30th of June is not far away. And I thought it would be more relevant subject matter to talk about it and of value to a lot of my listeners. Please note that whatever we say, it is as a general advice. And if you have any questions, please give us a call or contact your accountant or your financial planner before you do or consider anything. So what is concessional contributions? Concessional contributions is the contributions that we can make to our superannuation fund and then get a deduction for that. So we make the concession contribution to the super fund. So we earn $100,000. We take 27.5 of this and we put it to the super. Then we have a deduction of 27.5 in our personal tax return. And this money, the $27,500 inside the hands of the superannuation, if it is a SMSF or industry super, it doesn't really matter, will pay 15% tax. And the rest of the money, the other 85%, then invested in your super at the risk tolerance or whatever way you have invested them in your super. It used to be $25,000 concession contribution, but for the 2022 now is 27.5. This is concession contribution makes it taking a deduction. The non-concessional contribution is for the 2022 financial year, it's $110,000 per year, or you can do one lump sum together, $330,000 in 1 year. But of course, you cannot do anything for the next 2 years. So for 3 years, you prepay 330 concession contributions to your super and or 110 per year. And this, of course, is after tax money, so you don't take a deduction, and also in the hands of the superannuation doesn't pay any tax. There are certain rules. If your balance of your superannuation is above certain level, 1.6, there is some restrictions, some age rules, but it's not a subject to talk about today in that detail. I just want to make you aware that now, because we are in April and we have April, May, and June, really, and disregard the last 10 days of June because still it needs a bit of time for the super funds to process any payments you do. So we have only a few weeks. You need to consider your superannuation contribution strategy if it is part of your tax minimization or asset allocations. The other important aspect that we have now, it is really the carry forward unused concessional contributions. You know that we have $27,500 this year, $27,500 for next year. We had before $25,000 concessional contributions for the years before. So from 2019, 2020, we have the tax office or the government allow us to have a carry forward loss, allow you to make an extra concessional contribution above the general concessional contribution cap without having to pay any extra tax. The carry forward arrangement involves for you to pay extra and see what you didn't catch up, what you didn't pay in the 2020, 2021, 2022 years, and then because you didn't have the cash, or maybe mothers they were they didn't work full time, whatever it is the reason, then you can catch up and do and use your maximum contributions in a later year and then take a full deduction of that. There are two rules. One rule is that the total super balance at 30th of June of the previous financial year should not be above $500,000. And of course, the second rule is you made a concession contribution in the financial year that exceeds your general concession contribution cap. So today you made a $30,000 contribution concession contribution for 2022, which is mean 2.5 more than your cap for this financial year. And then we can subtract this $2,500 from last year's concession contribution that you didn't meet the full amount you're supposed to do if you had the money. So what is the very, very important aspect of that? That you can use these carry forward contributions as a part to use some inheritance money, some lump sum, if you sold the property and you're sitting on a bit of cash, and you are really not far away in the age to be your retirement age, or to be on age that you can access your super. This is a very effective strategy. But even if you are a younger and you are a high income earner now, but before you were not, maybe you can use this 2020 gap that you didn't full on the $25,000 at that time, and the 21 financial year, and then reach and take the maximum contribution you could, concession contribution you could have made if you had the money. So it's a very tax effective scenario, because you take the deduction now, and as exactly the same if you had done these contributions in the previous years. So I give you an example. Say if, for example, you earn $100,000 in the last 4 years, and you did only super contribution of $10,000, say 10% of your super, give or take, then you still have about $15,000 for the previous years and 17.5 for that year that you can do extra contribution. And you sold the property, and you're sitting in a net cash that you don't know what to do, or you're not sure if you invest in something else. Then it's a very tax effective way to minimize your tax from the potential capital gain tax that you had by selling that property, and also increase your balance in your superannuation for you to provide more funds for retirement in a very tax effective way, which is 15% tax. And later on, if you go to pension, to be even really above 65, then it will be even tax-free, all the earnings. So the moral of the story for today's video, it's really, we have concessional contributions that you need to consider if you want to take the maximum deductibility of that, which is for this year's 27.5. The other thing you can consider is the carry forward rule. And you see, if you haven't done the full amount last year, the year before, up to 2020 financial year, then we can catch up now if you have the cash and if you have the funds, and put them to the super to work harder for you on a better tax. And the third thing is, if you're sitting in a large cash amount for whatever reason, to consider non-concessional contributions and take advantage of that if it fits your long-term financial planning. The main point of today's meeting is you need really to talk to your accountant, to your financial planner, have a discussion with him or her to see if you have this opportunity, and if it is worth for you to have this extra deduction through super. And of course, if you don't have the available cash, nothing really you can do now. You just postpone for next year, hopefully. But if you do have the available cash, or somehow there is also sitting in a big capital gain, if you sold the property or if you sold the parcel of shares, then you may consider it. So please give a call to us if you need any question on 96007760, or email us at pw@silveryoung.com.au, P as private, W as wealth, @silveryoung.com.au. Till next time, have a good day.